Hey guys, how's it going? I wanted to share this new to me and exciting indicator that I stumbled upon while cruising through X. It's quite amazing. So let's take a look here. So it's called the NFCI for National Financial Conditions Index. Okay. Um, it's available here on the Fred. So what is it? What does it follow? Let's take a look here. So it tracks the overall health of the US financial conditions by combining 105 indicators: money markets, debt equity markets, banking systems, etc. Okay, how does it work? It's scaled to average 0 with a standard deviation of 1 based on data since 1971. Positive values uh, plus 0.5. Okay, meaning tighter conditions, less liquidity, higher borrowing costs. Negative values right now, currently, as of today, we're at minus 0.54, which means looser conditions, more liquidity, and easier credit. So that is a good thing. Okay, it updates weekly, which is important. And what does it do? It can predict asset moves like Bitcoin, especially during big shifts in the market. Okay, this is not one for day trading. This is what I love, macro. Okay, macro. Now let's take a look at TradingView because it's an indicator that's also available on TradingView, which is awesome. Okay, this is the indicator here on TradingView. As it is, it's not super useful, but we can make some adjustments um, to increase the utility of this. So first of all, let's start with inverting it. Invert scale. Now, does this look like anything that maybe we've seen before, I've gone over a couple times? Does it look like anything? Well, look here. Boom. This is the business cycle in the blue, okay, and the NFCI with the red and green gradient. It's virtually move for move with the business cycle. Business cycle obviously is following financial conditions. Okay, incredible. Now, let's remove the business cycle for a second. That's something we're familiar with. I wanted to show you how correlated they are. Let's remove that for a second, for a moment. And right now we have the line chart. Remember how we mentioned when I was reading the definition that this is weekly updates for the NFCI. The manufacturing orders, the ISM, monthly updates. So it's macro, not updated often. It's hard to be proactive with it. Okay. Now we have one that's weekly. Line chart doesn't really show us as much data as it could, as much data as we need. So let's change these settings from line chart to circles. Aha. Now we have more actionable data. All right. Each circle represents 1 week of data. All right. Whenever we see, excuse me, whenever we see a big gap between 1 week and the next week and the next week, that is a cascade in national financial conditions. This action happens first and then assets react, typically 4 weeks later. Okay, now it's not great for predicting just steady Eddie moves, but we're talking macro, like the big ones. Okay, we have other tools, other indicators that help us with the intermediate, but we're talking about the big ones. Okay, like the black swans, the tops of bull markets, when things roll over, when we find the bottoms, um, right? Big swings. This is what this does. All right. Now, let me add a little bit of context here. Okay. Um, move this around. Let me move some things around here. This on that. All right. Okay, here we go. Now, let's start back here. Here, this first green vertical line, we can see that it turned from bearish momentum to bullish momentum. 4 weeks bullish momentum, put in my next green line, that would have shown us that there is a reversal coming out of this bear market heading into the next bull market. So if we would have counted those 4 weeks of shift in momentum, then we could have got in. Look where it's at. Bam, right there. Could have got in the bear market down here when Bitcoin was $3,600. Ride that up. Okay, now we have other indicators to show us um, these middle moves, but we're looking at the major moves. Okay, and the second major move here is COVID. COVID happened. Financial conditions plummeted. 1 week, 2 weeks, 3 weeks, 4 weeks, massive gaps, just falling, cascading. Deep dive. We see that. We count those 4 weeks. We see the distance in between these reports, these data dumps that we get every week. We get out after 4 weeks. Look where we get out. Look where this line is. Right before it just all went to crap. We would have avoided this. Okay. And then we get a reversal here, and it's a big reversal. You can wait 4 weeks. If you get a big reversal like this with these gaps, then you can, it looks to me, like I'm still going over the data, but it looks to me like you can jump in early. You see a reversal of 1 week, 2 weeks, you jump in, and you would have got back in here at sub $7,000, right? And then this thing just kept on going and kept on going and kept on going. Now, the next major shift, look here, we see big gaps again happening up here, right? It's pretty tight, it's pretty flat, then we get these big gaps, boom, boom, boom. You get 1, 2, 3, 4 weeks. You could have even waited 6 weeks if you weren't sure for the direction, waiting for 6 weeks. And you know what? This is scary. We've got big gaps, we've got a directional change. Let's get out. And you would have got out at pretty much the exact top of that bull market, right? 4 weeks in advance. Okay. Now, so this is showing the change directionally in the financial conditions of the US. Now, what about the reversal here? Okay, so maybe you would DCA in here. It's not a bad spot to DCA in, around 20 grand. It falls off again. And then you have 1, 2, 3, 4 weeks. Okay, you can get in around here, around 18 grand. These are awesome entries. Okay, so using this in parallel with using the liquidity cycle information, no, sorry, using the global M2, we have another indicator that we use for global M2. Using these together is a game changer. Okay, so we see that there is a directional change here, 1, 2, 3, 4 weeks, buy-in down here, and then we're on our way up. Now here we had Bitcoin take a dive. We had financial conditions take a dive. Bitcoin followed it. Okay. Typically, when they're smaller moves within the cycle and they're not huge momentum shifts, we don't always get a 4-week lead. Okay. We have other indicators for that. But you can see that Bitcoin does follow financial conditions with or without the lead. When they're smaller moves within the cycle, they're not huge shifts, we don't get that same lead. But Bitcoin follows financial conditions, as you can see. What are we seeing today? Today, we're seeing a big dip, similar to this dip, similar to this dip, okay? Similar to perhaps this dip. But what are we not seeing? We're not seeing the same dip in financial conditions. Financial conditions are flat, they're sideways. So what does that tell me? That tells me that this dip is probably not real, right? If it was real, we would have seen this. We would have seen this. We would have seen this or this. But we're not seeing that. So something else is going on. There's nothing structurally wrong with the financial conditions in the US. And global liquidity is pumping. So I expect, I don't know when, I don't know if it's this week or next week or mid-December, but if this was a Bitcoin top, I would expect to see this. It's not. It's sideways. It's not even one of these big corrections that we've seen back here. So if it was, then we'd be seeing all these big dots coming down. We're not seeing those big dots in financial conditions. So that tells me we're most likely, let me just do this here. A sec. We're most likely going to see a tick up in financial conditions soon. Maybe there's a few more red weeks. Soon we're going to see a tick up in financial conditions. And it's probably going to be a fairly aggressive one. And then we'll see Bitcoin follow it up. This is what I'm expecting. What we're seeing here with Bitcoin price action, with financial conditions, it's not typical, right? You don't typically see that. All right, I just wanted to share that with you. This is an indicator that I think is quite remarkable. I just found out about it. I don't know of anybody else that talks about it or uses it. We're going to be, and it's going to help us a lot in navigating this market. All right, guys, I'm going to leave it there. If you're playing around with the indicator and you see anything interesting, please share it with us, and we can deep dive it together. All right, everybody.